So, just a brief overview of the types of security tokens we're seeing right now. We're seeing a lot of real estate, equities, venture capital, commodities, hedge funds. And the interesting thing is, up until this date, we launched live in August, and up until now, we have actually issued 45 security tokens, 21 secondary registered. So they're potentially just in queue, waiting for off-chain legal compliance, and to be issued within the next 6 months or so. So we're seeing a huge amount of security token influx. It's only been about 3 months now, and there are also a large number of issuers in queue who have approached us and are looking to facilitate the creation of some new STOs. So as far as the evolution of security tokens go, if we think back to the beginning of the ICO days, back when Mastercoin came out, you could buy it with Bitcoin, and there were no regulations about who could invest. Anyone could have gone in. It was very unregulated at the time. And then we moved on a little bit further to the launch of Ethereum, and that kind of really pushed the entire market. Back in 2017, Ethereum led to that massive upswing in the market cap. We had a huge amount of dApps that were coming out, even other infrastructures that were building on top of Ethereum to eventually launch over to their testnet. And we think that it's going to head that way for security tokens as well. But in order to do so, the difference between these ICOs and STOs, as Tiago mentioned, is that KYC and AML and regulation has to be a key and integral part of this STO process. So as we're seeing now with STOs, regulation needs to be baked into the token itself. The secondary markets need to be able to hinder who can own these tokens at any given time. And we're seeing a lot of movement towards KYC restriction. As Tiago mentioned again, the SEC has been clamping down really strictly on ICOs that are coming up. We saw, I want to say it's Foxconn and Paragon, who were charged, they had to give back the $15 million that both of them raised, and then they were charged with $250,000 fines each. So a lot of these new and upcoming raises who aren't compliant are getting hit with this impact, and the SEC is definitely starting to clamp down. And so, as I mentioned, in this the secondary wave, thanks to Ethereum, we did see this massive upswing in the market. And at Polymath, we think that this is going to be the case for security tokens as well. The entire market cap of what could be potential in terms of assets, $1.62 quadrillion worth of illiquid assets locked up, and that was a 2016 statistic. So if we can just capture just a fraction of that market, it's a massive new market to engage ourselves in. In terms of regulation and what we're seeing these days, obviously the U.S. is kind of the lead of who we want to follow and watch out for what they're doing. So that's because they have transnational securities fraud. They can reach out to any jurisdiction, any country. If you sell a security to a U.S. investor who is not accredited, even if you're not a U.S. citizen that's doing the issuance, you are liable for U.S. securities fraud. And because of that, we need to make sure that most regulations and compliance are in line with U.S. investors. Because we don't want to exclude U.S. investors. We want to make sure that anyone can participate in these sales. And we want to make sure that the way that we've structured our token is allowing these U.S. investors in as well. So we base the majority of our compliance off of U.S. first. Now, there's other regulators who are very open in this space. The Swiss regulators with FINLAW, Canada with the AMF and OSC. There's been a lot of discussions back and forth with these policy creators about not just the issuers and trying to be compliant, but also the issuance platforms and exchanges. They've been very open to communication. And that's what we're trying to hope to see. I'm based in APAC. This is my region, and we're starting to see that a lot in Asia as well. So Hong Kong and Singapore are the two major spots for security tokens these days, seeing heavily picked up trends in terms of the discussions there, and especially in Hong Kong, where it's the financial hub of Asia. Everyone's kind of getting ready and building the infrastructure, picking up the licenses needed. They just released some information about 2 or 3 weeks ago about the licenses that they will be able to offer to blockchain companies who are interested in getting involved with the ATS licenses, with broker-dealer licenses. They're becoming much more friendly, where we thought it would take, months on end, maybe up to 12, 18, 24 months for Hong Kong. They're actually moving at a relatively quick pace. And I think the pressure is on because Singapore is definitely, probably the quickest in the space. MAS there is investing even into security token exchanges. They're in constant talks. A lot of sandbox policy is coming out to try and bring in new projects. Korea, here now, and waiting for the announcement on whether ICOs become banned or not. If they are not banned, they said that it's likely to be an IPO style process, which I think is pretty much an STO, right? They maybe are not aware that security token exists, that this reg tech exists, that it is meant to be fully compliant with the laws that are already out there. So if you're doing an IPO, that's basically what an STO is trying to become. So I think once security token offerings are made aware to the regulators, then we'll see this trend pick up even more. Other places like Philippines, Thailand, and Taiwan, they're making a lot of headway. Philippines, definitely. There are multiple exchanges now popping up out of the Philippines. The focus that we might see in terms of when that's actually going to be launched is roughly mid-December, or mid-December to very early January, which might be one of the first security token exchanges in Asia. And I think people worry about the liquidity, where's it going to go? These tokens are locked up. There's nowhere that's actually trading. Even though Open Finance has 7 tokens that are live now, they're not actually trading. But if we get one of these international exchanges that's onboarding STOs, the first one that hits in Asia has that first mover advantage. I think all the STOs are going to try to be launching over there. And once we see this trend of secondary markets picking up, it's obviously going to be exemplary in order to see the kind of mistakes they made, how we can fix those, and how we can bring them into the developed countries. On a side note, I think the emerging markets are making much more progressive leaps in order to launch these security token exchanges. The regulators are just completely open to discussion with private companies. Even the more public stock exchanges are looking into doing their own security token exchanges, even partnering with some of these smaller ones. So it's an interesting market. I think it's going to trend and lead first, and then the developed countries are going to pick up on the fact, the drawbacks, the mistakes that those exchanges make, and then refine them for these developed markets. So from what we've seen on Polymath 96.5% private placements and 3.5% public offerings. Now, it's an interesting statistic because we're at the place in the STO, the security token market, where we want to make sure that everything's compliant. If there's any mistakes right now, I think with one of these launches that we have breached some kind of securities law in any jurisdiction, it's going to impact the entire industry. Once there's that landmark mistake, that becomes something that the regulators will bring up, that lobbyists will bring up at a constant pace. That will be a key indicator. So seeing private placements be the majority of what we're seeing these days, it really makes sense because it's much easier to lean towards accredited investors, to do the KYC, to make sure we're not breaking any regulation. So this is definitely keeping us to think that security tokens are held to a higher standard. There are many restrictions with security tokens. That is a key point. And with Polymath, let's go into what we're doing. We're trying to launch security tokens in minutes, not months. We have very low barrier of entry for individuals and issuers who want to come out. And we do so through baking the KYC AML into the token itself. So the whitelist, all the restrictions for the token, for the issuance are in the token itself. Not, we don't rely on the secondary markets, the exchanges, to do the regulation and to hinder who can own these tokens. We want to make sure that the restrictions are in the token itself. So we saw an example with Blockchain Capital, which released sometime in 2017, where they had not restricted on the token level who could own that token. So there was the max accredited investor limit was 2,000 at the time. They sent it over to the secondary markets and hoped that they would maintain the restriction on who could own that token. But what happened is people took that token off chain, did some over-the-counter deals, and now that 2,000 investor creditor limit went from 2,000 to 3,500 to 5,000. And obviously with securities laws, you can't, it's not flexible at all. So they got hit with a fine, and we realized, thanks to that we needed to also enforce these regulations on the token level. So Polymath, the aim is to be extremely scalable. We want to reach out in every jurisdiction, all different types of securities, any offering category with accredited and unaccredited investors. And we really do so through partnering with the proper third-party service providers, the investment banks, the legal teams in each area who are already established and already in talks with regulators. I think the idea of trying to build out a team in each region to really scale is going to hit you with bottlenecks. You're not going to be able to take as many issuances. So our idea is to make the proper partnerships, and with Polymath, we're very modular. That allows us to be completely upgradable for each jurisdiction. We have bounties on our GitHub for developers who create these security token modules. They're audited internally, they're audited by third-party service auditors, and we implement these restrictions on the token through this modularity. So I think some of the benefits of security tokens that people often talk about, you're making illiquid assets liquid, you have global access to different investment pools, and it's 24/7, right? But we rarely talk about the improved investor protection, the cross-jurisdictional transactions that we can have, the gatekeeper accountability, and the innovative ranking of financial products, like allowing you to have the cap table completely digitalized, the inefficiencies of current accounting systems and how blockchain is going to help with that. Especially on the investor protection side, the reason that we have SDOs is not to, and I had a question recently about ICOs. Why can't we have an ICO that's just more regulated, right? And the idea is not that we're limiting who can invest. We're trying to protect those investors who are unsophisticated. The sophisticated investors know what they're getting into. They can make proper decisions. But things like we saw recently in Korea with this Pyramid exchange scam that happened about a week and a half ago, $30 million wiped off the table for these investors who went into this exchange ICO. And I think if we have these limitations, it's not trying to impact those who made all their money with ICOs. It's not trying to limit those kind of investors. It's trying to limit the investors who are making these poor decisions, and then these scams that are following through after that. So we do so, as I mentioned, with the modularity of how we can create these security token contracts, and we have programmable enforcement of regulation through the primary issuance and secondary trading. So it really is an all-encompassing way of regulating the market. So if you're on Ethereum right now, this is the difference between a standard smart contract and what we've created. If you're on Ethereum, the limitation you're going to have when sending a transaction is going to be insufficient gas. You don't have enough Ether in your wallet. But with a security token, there are multiple ways that a transaction can fail. That's because of the programmable enforcement. Now, if we look at it, these are the limitations that we've implemented into the security token contract in order to maintain compliance and restrict who can actually hold this token. Good news was that we just released V2 of Polymath Core. That was about 3 or 4 days ago. Thank you. Oh, got cut a little bit short.
Keep going.
Can I keep going? So I can wrap it up in a minute. We have a few more restrictions that we've added. There are 4 new restrictions. We have forced transfers, tax withholding, in-place upgradability, and address exclusion on dividends. The most interesting one is forced transfers. That means if tokens are sent to any other wallet, we can actually extract them later through a third-party delegate that's confirmed in the original transaction. So you can pull tokens from a wallet after the fact that you've sent it. That's the first time on Ethereum that you're actually able to revert transactions, and that's going to be really integral for things like in a divorce case where there's a settlement and one spouse does not want to send their assets to the other, right? Then legally they would be bound to do so, but how would you do it if you didn't have forced transfers? If you were owning, 90% of your wealth in Bitcoin, then how are you going to share that other 50%? They can send you as many, what would it be? Send you as many different types of legal enforcements as they want, but that doesn't mean you're actually ever going to send it. So with forced transfers, we can enable that. So we are enforcing existing regulations across multiple jurisdictions. These contracts and limitations allow us to do so. The global market we're expanding in and using these third-party service providers and the established players in each region, that's how we are creating this ecosystem as a whole. If you want to go and try the dApp out yourself, you can go to polymath.network, create your own security token, go on the Koban test network and try it out now. It's free. You can run through the entire dApp yourself, 5-10 minutes to create a security token. And if we have any devs in the house, we are working on the ERC 1400, which has moved to 1411, the standard, to try and create an all-encompassing standard for the security token marketplace as a whole. Thank you for your time.